All right, let's bring in our very own Brian Cheung, who is live in D.C. ahead of the big Federal Reserve meeting. Brian.
Hey, morning, guys. Well, a big day here in Washington, D.C. I'm standing right outside the Federal Reserve building. They've got the fence up right now. I guess they're doing the lawn, but they're likely to bring that fence down later on today to show us a little bit about what they're thinking in terms of interest rate policy. The expectation now that the Fed is going to raise interest rates by 0.75% or 0.75%. That is a dramatic change from market expectations just at the end of last week that the Fed would only move by half a percentage point as they had been messaging for the last 5 weeks. Obviously, that high inflation report that we got from the Consumer Price Index showing 8.6% year-over-year inflation, spooking the Fed into wanting to get more aggressive here. Things to watch for in this meeting. First off, we're going to get an updated round of economic projections from the Federal Reserve, not only showing where they could see interest rates going in the future, but also their projections on inflation. Does that report from last week get them to revise up their expectations for how persistent inflation will remain above their 2% target? And then the second thing, of course, to watch is any sort of commentary from the Fed chairman about how he's thinking about this aggressive pace and whether or not they're going to stick with 75 basis point moves in the July and then forward meetings. All that commentary expected at the Fed press conference at 2:30 p.m. Of course, we'll have the full coverage of that right here on Yahoo Finance, guys.
Hey, Brian, continuing in kind of that thread of the thought where a lot of the fireworks could take place after the initial decision and in that press conference, what do you plan on asking Fed Chair Jerome Powell?
Well, there's so many places to go. Usually I'm towards the end of the press conference, so I kind of have a lot of options to go with. Do I elaborate on something that he's already tried to answer, or do I just ask something from left field? Now, of course, all of the attention in this particular meeting is going to be on certainty in the future. And I think broadly that is thematic to how markets are reading what the Fed is doing. If they promised for the last 5 weeks they were going to do one thing and then last minute change it, what does that mean for the credibility of future forward guidance? That's going to be something that I'm very interested to hear from the Fed chairman. If he wants to say, look, we're going to be more aggressive here, we're going to stay on 75s in the future, well, how credible is that guidance given the pivot that we've seen just over the last few market sessions? But of course, a number of other things worth watching. First off, a lot of people forgot that the Fed balance sheet roll-off program began this month. Could they adjust that in the future? And then secondly, how does the Federal Reserve think about the risks of recession, even perhaps financial stability with some of the rout that we've seen in crypto, for example, or in the broad equity markets? Is the Fed worried about that spilling over into other broader economic conditions? All things to watch for in that press conference later on this afternoon.
Yeah, and the credibility issue is really important. A guest that we're going to talk to in just a moment said in a note to us, called the Fed policy sloppy and choppy. Let's also talk about credibility when it comes to other central banks, namely the European Central Bank, which held an emergency meeting today, and then came out with a statement that one could argue wasn't necessarily an emergency type action.
Yeah, a lot of central bank action this morning with that 5 a.m. Eastern time emergency meeting that the European Central Bank called together. I feel like I need 6 energy mints just to keep holds of all of this news that's breaking. But look, all this is about the F word, fragmentation in the euro area. That is what Christine Lagarde actually hinted at when the ECB had its pre-scheduled announcement not so long ago. But after remarks from another ECB member yesterday, it seemed like the ECB figured that they need to get around the table to talk about differentials in yields across the many different types of government bonds. And I want to just kind of take a step back here and remind our viewers that whereas the Federal Reserve only has one domestic sovereign bond market to watch, that is U.S. Treasuries, the European Central Bank has to watch every single domestic sovereign bond for all the members of the Euro zone. So when you take a look, for example, at the Italian 10-year, that has risen by about 3% just since the beginning of this year. The German bond about 10 years in duration as well, only rising about 1.5%. What does that do to flows in and out of the Eurozone? That's a big concern for the ECB as there's different realized inflation in those different countries. The statement that we got out of that emergency meeting this morning said, based on this assessment, the Governing Council decided that it will apply flexibility in reinvesting redemptions coming due in the portfolio that has to do with their emergency purchase program, essentially their bond buying program. They might bias that towards governments that perhaps are getting more differential than other governments. We don't have the details of that. And as you mentioned, Julie, the details of this are very slim. If anything, this seems to be more of a plan about a plan as opposed to hard details about exactly what they plan to do.
All right, Yahoo Finance's own Brian Cheung. You can stay tuned to watch Brian break the Fed decision live on Yahoo Finance at 2 p.m. Eastern Time.